Hey guys, Mike here. So another jam-packed video for you, and I can guarantee the Fed was happy today when they saw that jobs data come out. Whether it's accurate or not, who knows? They keep revising these things up and down by a country mile, so we'll see. But I think they're getting what they want when it comes to the jobs reports. Again, we got another one coming tomorrow. They usually contradict one another. One's usually like either soft, the other one goes hot then, or this one's hot and that one's soft. So, we'll see how that one looks. But, these are what you should see when you have rates higher than normal. Okay, when you suppress rates for over a decade and all of a sudden raise them as fast as you've ever raised them in history and hold them there, this is the kind of numbers you see. So I'll show that to you and stuff. But somebody asked me, and I'll go into way more detail on this Saturday. I'm getting a lot of questions about this stuff. When we talk about rate cuts, remember they're already pricing in the market that is 4 rate cuts next year. The earliest one is in March. That's only 3 months away. So, it's like, that's pretty quick. Put in the comments if you think that's going to happen. But somebody had asked me in the comments last night, they say, hey, the Fed doesn't cut just out of the goodness of their heart. Why would they cut? And I'm like, well, that's technically true. They don't cut out of the goodness of their heart. But if you look at the Fed funds rate, they're cutting before an official recession ever gets here. Now, in 2019, if you noticed, Jerome Powell them cut in July of 2019. We didn't shut down the world till February. All right, it's like 8 months later. But what was happening in the news? He was getting destroyed by the president every day, beat down on Twitter. And anytime he did an interview, just trounced him, saying, you're going to run us into a recession. And so he cut. Whether or not, because, according to economic news, we were declining for sure, and new orders and all this other stuff. Maybe that's why he did it. Maybe he just couldn't handle the pressure, And so I'll let you make up your mind on that. So, going into the data that happened today, and then I also want to show you something while you're watching this video. I want you to tell me in the comments if you had to put 3 things, top 3 things in your head that will make a stock pop faster than anything else. What are they? And I'm going to show you one, and this instance will tell you, to give you a hint, this shows you the economy is not the market is not the economy. And I'll show you 2 examples of this. Now, obviously, after the bell opened, you can see right here, we had the economic news drop, and all the S&P and ISM numbers, they came out kind of within normal. And actually, some of it was better than what they actually expected as well. But it was the JOLTS job openings. This thing came in, much lower than what the forecast was. Again, is this going to be accurate? That's what we're going to have to find out. But you can see on this chart right here, this is what the Fed wants. They want this thing coming down. They don't want people being able to go out there and find multiple jobs and all these job listings. So when they lose a job, they can go get one, right? And you can see, it was going up from 09 all the way to 2018. So even if you take this right here, let's say that right there is an average. Like that's where it needs to get back to. That's still quite a ways down. That really is quite a ways down. But we're getting there, right? It continues to go down. And again, how many of these jobs are real? Who knows? Honestly. But even if we kind of look and see, where was the trajectory, if it even kept going like it was before we shut down the world, we would have basically, where we're at now, probably would have been right there, right? So maybe this is the norm. That's what we don't know. Because it was trending up for a number of years right there. And I'll tell you something else. I tried to put this in here. Man, short seller, you want to talk about getting roasted? Remember, this ain't their money. This is your money. But boy, they lost $80 billion in November. And this is what really helped fuel that rally, because they had to close a lot of these positions, right? And now the other thing is, some of them might still be holding these positions and might still need to close out, which means they're going to have to buy back the stock to get out of the position. I don't know about that, but if that's the case, that could be something else that helps fuel a rally in December as well. Now, of course, this was opposite day, right, of what we've been seeing. What do you see at the top? It was all about the Mag 7 today. Okay, I think I have like 9 stocks in here, but it was all about the Mag 7 today. They were at the very top, XLK, the big ones. Pretty much everything else was red. And so it was opposite day. So at the bottom, you're sitting there with the real estate. You're sitting there with the small tech stocks going down. XLE was a total mess, by the way. Of course, I guess it's just been that way for the last few days. But, everything that was green is red. Everything that was red is green. Now, what really caused this? And real quick, guys, if you can go ahead and hit that like button for me to help people find this video, I really appreciate it. And if you want to give me a double help today, you can hit that subscribe button if you like the content. Well, number one was, and you'll see this on a lot of these, Tesla ripping, right? I told you, when you start wedging like this, you're going to get a move. Every single time, I show you this every single week. Whenever it gets that wedge, boom, you get these green candles. This is, of course, when you see this, and I saw it this morning, And I put in the Discord, boy, here comes the call sweeps flowing in, pushing, pushing, pushing. If you'd have been sitting there, and I know this for a fact because I was looking at it, the 235 call right at open, that thing ran from $4, which is $400, to $1,200, which of course is $12. But yeah, so 3x in a matter of like 35 minutes. So that would have been a nice little move. But that's what you get to see when you see this. And again, you can try to predict it if you want to which way it's going. But you see what happened at the bottom there? It gets right in that 231 to 234 range. It bounced again in pre-market, right? That has just so far been the play of the month, really. It's just it gets down that area, buy calls, and it goes up. So far, that is holding up. That's what I said. If that area breaks, then yes, we're going down to 225 for sure, because that's been really good support. Now, of course, that 4-hour fair value gap we talked about yesterday would be a good draw on liquidity, so we'll take care of that. This other fair value gap, we'll get rid of that as well. And when you look up there and think, well, okay, again, I always look at fair value gaps, RTH gaps, all the stuff, especially when it comes to Tesla. And of course, when we look at this, why did it stop way up here where it stopped at? And when we scroll back, you'll see right here, there's a fair value gap right there. So of course, it mitigated the fair value gap, started to sell off, and there you go. So the things are powerful. Learn what they are. They'll help you out and change your life. Now, when we zoom out on Tesla, you can see, again, what are we doing? Still wedging. And look at this. If you look forward to this, really, this thing is only going to build a wedge for about another maybe 8 to 10 days before it's going to have to make a decision. And so it's going to have to make a move one way or the other, up or down. I think a lot of people would pick probably up. And if the market is really roaring, then yeah, I can understand what you're saying here. And you can see a lot of support sitting there at that 231, 234 area, right? And so I was saying, if we break it, going down to 225, which a lot of people would like to see anyways, they'd like to pick more up or sell their cash secured puts or whatever. But yeah, so that's where we're at on Tesla right there. Now, looking at Nvidia. Wow, look, it bounced. Why'd it bounce? What we talked about yesterday, you're coming into support, looking for confluence. What else? 50, 100 moving average right there. So of course you get a bounce. And it's had how many red days? So, this is something, it's not a surprise or anything. You expect to see it bounce up. How long is that going to continue? So we'll have to find out. Again, you got fair value gaps on this one that you can look to mitigate on the hourly. So that could be a liquidity draw for it moving up. And then, of course, again, if it breaks past that 50 and 100, then yeah, this thing is going down like 433 right there before it actually hits some more support. And of course, what else we seeing? Hedge funds probably dip buying today, right? To try to window dress their portfolios and stuff. Now, of course, here's Apple. Big day for Apple. It moved up over 2.5% at one point in time. People are like, wow, I know people wanted to short this too. Glad they didn't, because this is a news event that pushed this up. And, when you look at this thing right here is all-time highs, right? So we're just going to put this trend line in here so we can go and see it. We're not far from all-time highs at all. Again, when it gets there, we'll build a breakthrough like Microsoft did, and we'll find out. I mean, Microsoft seems to have a lot of strength. And again, this was a news event, so of course, what happened? And when Apple goes up, the market tends to like it. Well, of course, a key supplier raises their outlook, and so that looks really good for Apple. Who was the key supplier? It was Foxconn, right? So they basically said sales in the first 2 months of the fourth quarter were slightly better than expected. So, of course, people think if that's the case for them, that means Apple's fourth quarter must be better than what people were expecting. So it moved, right? Now, Google, another one, coming into support right here, end up getting a bounce right there, which should have the 100 was a brick wall for it today. It started to sell off after it hit the 100. And this is one of those ones, if it loses that area right there, I think the 200 definitely is going to be in play for support, which better be support around 123 right there, which would also coincide with the October low level. And so I think that would be a good bouncing point right there if it continues to show weakness. Now, when we pull up our volume profile, you can see what I'm talking about as well. That's where you see support. It'll go in that volume gap, and it'll slice through it like butter. You can almost guarantee it. So we'll see if we continue to bounce up. If it can get past that 100, the 50 is right above it. So again, and Google's not like the rest of these. It moves much slower, right? Now, Amazon really hasn't been weak. It's just been consolidated, right? Now, whether or not that's going to be distribution, we don't know. Whether or not it's accumulation. And you can see it's got that dotted trend line. It's had trouble getting past. It's got the ascending trend line, which again, it couldn't get past and got rejected. Sitting right there in that volume gap, just kind of hanging out right now. And so which way this is going to go, your guess is as good as mine, I'll be honest with you, because Amazon's an interesting one to me. It doesn't move like the rest of them do. It moves kind of almost like a Google instead. But when you look at this, what I'm really curious to see here is Amazon is famous for getting in basically a range, right? And it'll sit there for like a year or two. when you do this. You saw it here, you saw it right here. That was over almost 2 years right there. And then of course when you do it, it'll accumulate, and then it'll obviously move up, right? Here's another one that was over a year. Okay, and if you keep going back, you'll see it more and more. And so I'm just curious to know, looking back over, like at what point in time, there's another one, looking back over this, at what point in time is it start picking a range and it's just going to stay in that range like it's done in the past? Or will it change its stripes and start moving like a Meta or Netflix or, Tesla or whatever? I mean, that's a big question there. But again, is this going to start, once it gets to that top of that range, is it going to start being a range? Let me know in the comments what you think. Now, Disney, watch out for this one, because obviously we filled the gap like we talked about, which we thought, makes sense. Come on down here, fill this gap, we'll get rid of it. And, sitting there finding good support around the $90 range right there. But, when you look at these moving averages, what else saved it is the 200. The 200, if it loses the 200, we're going down, we're going to fill that gap right below for sure, which will hit the 150 moving average as well. When we pull up the volume profile, even better, we can kind of see, what I'm talking about. If it loses the 200, it's going to go through the rest of this. Might find support maybe at 88, but I think that gap's going to be more likely with a moving average of setting at. Now, looking at BABA, somebody asked me about this. I'm just going to say it. I mean, I'll keep saying it's a hot mess. It's garbage. China's garbage. China's economy is garbage. And, when you look at this, they keep trying their best. But this one's not responding like some others are, right? This one's been just put in the doghouse right now. And, I mean, no momentum whatsoever. It fell out of that demand zone right there, which is big time. And we zoom out, really what you got to start doing is marking these lows down here and saying, well, maybe, what is that, 61 or something? You get some hope that it bounced or something. That's a ways away, but that's your last level. I mean, not saying it can't turn, but boy, it needs some buyers to come in, because sellers are still selling, right? Now, PayPal, last one before we get to these other stocks. Again, this is setting the bottom of that range right there. Again, this could fall through, but what you're looking at, because maybe that's a bear flag, right? We've had these multiple times on this one. Again, the 100 was resistance. The 50 is right below that. You can see it fall out. So be careful. If this falls out of that, then you could be going to the bottom of that range and sitting there around 52, 53 again. And so, and again, it's been on fire. I mean, it's had a very nice move. Unlike Square, this has been more of a step ladder, right? So stepping up, which is what you really want to see. Square just kind of straight up. But it does have support levels, kind of built out a little bit there to maybe help it if it does fall out of that channel. Again, we'll have to see. Now, what makes a stock move faster than anything is definitely, your top three things you're probably putting at the bottom down there. One, and this is the big one that shows you the economy is not the market's not the economy, is laying off employees, buddy. And we had 2 companies announce that this week. And you saw it, Spotify, they're going to cut another 17% of its staff. They've been cutting for like over a year now. All right. And so they're going to lay off by another 1,500 employees, which what's the other stock? Twilio. They're going to cut another 5%. You see their headcount there. It's been going down since last year, right? They just keep reducing. And of course, again, is that great for the economy? Absolutely not. But is it great for the stock? Yes, because it helps the bottom line. Does it help the company grow? Probably not. But the market don't give a crap about that. And so you can see Spotify, and these 2 stocks are total opposite ways. Spotify has just been on fire in 2023. Huge moves up, just bouncing off that trend right there, as you can see. And the one thing I want to make sure you understand, this is great examples of the stages. 1, 2, 3, 4, right? Stage 1 is accumulation. 2 is the huge move up. 3 is going to be distribution. It looks like accumulation, but it's not. Distribution when it comes down, right? And then 4 is the crash. And so what is it doing? People can say, well, maybe this is stage 1, maybe the whole thing is stage 1, maybe we're in stage 2 because it is above that 30-week moving average. It has tested it multiple times and continued to move up. And then when you look at the opposite one here, Twilio, it did the opposite. It's been selling off all year, but it's had some huge moves. I mean, these are enormous moves up, 77%, 60-something%, 50-something%. As it's done this, and now it's breaking above that trend line, retested it, and starting to bounce right there. Now, when you look at it, what else is it doing? It's putting in there higher lows, right, throughout the last year here. And so that is not a bearish thing. But when you look at this, what needs to happen, it needs to break those September highs, put in a higher high right there, and then we go for the July highs. All right, now when you look at this one, this is even better to look at when you look at stages. My goodness. That is clearly a stage 2 right there, as you can see right there. And the next one is stage 3, of course, and then the crash, stage 4. And that to me is still stage 1. I don't see stage 2 over to the right. I still see it trying to base out, move itself up. It's trying to go into stage 2, right? But it needs to get above that 30-week moving average on the weekly chart here and test it and bounce, right? And start, so now you have support down there. You saw it on the chart I just showed you. So, learn those stages. I'm telling you, they'll save you a boatload of money if you understand the stages for sure, okay? Ask me any questions you want to on that one. I'll put it in Saturday's video. Now, earnings, you'll have a bunch of different retailers plus Campbell Soup, and then some high beta stuff for sure, like C3AI, GameStop, Chewy, and then ChargePoint in the afternoon. Let me know what you think about any of those. And then that leads to the economic data. We don't really have a boatload of stuff. You have the mortgage stuff, which I don't think anybody's really going to care anything about. The big one's going to be the ADP employment change. The forecast is 128K. Again, usually if one of these, like the one today, Jolts, comes in softer or something, sometimes you see the ADP come in super high, and then they have to revise this thing down like crazy. I don't really see anything else besides oil data that's going to affect this. We should not have a problem with a 17-week bill auction, crying out, at 11, but you never know, and so we'll just watch the yields. If the yields spike, obviously there was low demand, I guess, but 17 weeks should not be a problem, you would think. It's usually the longer-term stuff. So we'll watch the ADP. That's the one I'm pretty sure they've been revising like crazy the next month. I mean, the accuracy of these reports is sad this day and age that these reports are off this much. But the way they calculate stuff, I guess it makes a lot of sense. So anyway, hit that like and subscribe button if you got anything out of it. Really appreciate you guys. And I will see you tomorrow.